Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Hello and welcome to a fresh new edition of Bazaar Morning Call. We are coming to you live as always from the CNBC TV 18 Motilal Oswal studios. All of us in festive attire. It's a beautiful looking set as I'm seeing it for the first time. And right at the outset, let me wish all of you, your families, a very, very happy Dhanteras. And of course, leading up into Diwali, wealth, prosperity, and of course, most importantly, health to all of you who are with us. With me, my colleagues Reema and Nigel. Guys, hi, morning.
Hi, morning.
Hi, good morning. You know that song, it's beginning to feel a lot like Christmas. I think we need a Diwali version. Just going by this beautiful set, the price action yesterday, and you know, everyone's dressed up in office. You can feel the festivities.
Well, that's right. Wealth, wisdom, and well-being, right? I mean, that's what we're looking forward to. And hopefully, we're bracing ourselves for a good festive season because the run-up actually was a little bit gloomy. And now it seems to be picking pace as well. But not a bad idea, Reema. I think someone should do that.
Actually, just think about it, guys. I mean, on the eve of Dhanteras, we got a almost 3.5–4% move on gold last night, right?
Ooh.
I mean, it's getting a little...
we said that even last week. We said that the week before.
Oh,
but
it's still 4% in one day?
Yeah.
I mean,
that's a bit much.
That's big. And at this level.
At this level.
So anyway, let's just take it from
I'm
the top.
checking Dhanteras to Dhanteras, right? So last Dhanteras, gold was at about 77,000.
Yeah.
And now we're what, 129, 1,29,000 for 10 grams? I mean, that's the extent of the rally from in 1 year.
Absolutely. Let's just take it from the top then in terms of where we are at, right? And I want to just start with, of course, a little bit about Russia and Ukraine. So President Trump spoke with President Putin. We know this because President Trump put out a sort of truth on Truth Social, and he essentially said that he's spoken with President Trump. And about a variety of issues and, of course, trying to end the war between Russia and Ukraine. He said President Zelensky of Ukraine is going to be at the White House tomorrow and he's going to sort of talk to him about how his phone call with President Putin went. And then Trump said that he's going to meet Putin in Budapest at some point. Location undisclosed, but that's going to happen as well. Now, yesterday evening, we had a clarification. Remember, when we came in yesterday morning, actually day before yesterday morning, there was that excitement that President Trump essentially had said that he's spoken, or actually this was yesterday morning, that he had spoken with, India, and that India promised that they're going to reduce the purchase of Russian oil and they're going to buy more US oil. Yesterday evening, the MEA essentially said, our MEA, the Ministry of External Affairs, said that they are not aware of any call that happened between both the leaders, which is President Trump and Prime Minister Modi. But they did not sort of confirm or deny what they're going to do about the oil. So I just want to make that very, very clear in that sense. And I think it's an important point. You add to that what we are waking up to with this morning, which is President Trump saying, well, he's going to make a fresh attempt at peace between Russia and Ukraine. And I think it still remains constructive in that sense. Now, what is not constructive is everything else. So look at US equities last night, down S&P down 0.6%, Nasdaq down about 0.5%. And out of the blue, you've got the regional banking sector in the US taking a big dive. So the KRW, Regional Banking Index, fell 6%, over 6% actually. And why? Because two regional banks essentially said that they were hit by frauds. Without going into details, and we perhaps can later, but it basically sparked off broader credit concerns across that small banking, regional banking sector. It's not new. We've seen this earlier as well. It's new this time in that sense. Gold prices, as we were just discussing, 3% plus, actually 3.5% last night. Just an incredible move on gold coming through. The 10-year lost 6 basis points, under 4%. Oil was down. It was basically everything risk off. Data to boot was weaker as well. So you had the Philly Fed, which came in at the lowest since 2021. You also had the New York Fed services data, which was weaker than expected. And of course, I mean, there's no end in sight to this U.S. shutdown. Treasury Secretary Bessent saying that the cost of the U.S. economy could be up to about $15 billion per day. And markets, in response to all of this, if you look at what Fed pricing is, they're pricing 225 basis point cuts by the end of the year. So that's the picture. I mean, I started with something slightly maybe at the margin, a silver lining positive, which is Russia, Ukraine, President Trump trying again. But everything else which rolls after that, which is market action, the regional bank stuff, and of course, the data, I mean, it's not looking all that great. Now, just to come back to where we are at, and we are in a very, very good place with the rally that we've had. Yesterday, we saw a powerful follow-on rally, and we've actually taken out many important resistances on the upside. The next stop, it's an equality level, is 25,705 for the Nifty. The support comes in. It's moved up. I mean, the big one is 25,008 as we've been putting out. But now you've got to look at trail this actually. With the 40-hourly exponential moving average is 25,300 or so, 291 to be precise. Nifty Bank, by the way, is almost back at all-time highs, right? I mean, that is 57,628. So I'm not going to put out upside levels beyond this now. Let's see. Support is again the 40-hourly exponential moving average, which has been dragged up along with the index, which stands at about 56,692 or so. So, I mean, pretty good place, pretty good position. You've got this sort of, another push for peace by President Trump. There's this meeting tomorrow, so maybe when we come back on Monday, perhaps there will be headlines, etc. We don't know. We just sort of go into this weekend with all of this stuff. GIFT Nifty will come up. It'll give you a quick sense of how we're likely to start. We'll pick it up from there. 50 points lower, 25,600 or so is the implied open. The F&O positioning, the F&O data, Nigel has walked across with exactly that. Nigel, over to you.
Well, the festive season is definitely here, as the Nifty yesterday closed at a multi-month highs, and things have been looking good. But I'll tell you what, we talk about shorts being in the system and why that's a blessing in disguise. Well, the perfect example has been this series itself, because from the start of the series till now, we're up close to around 1,000 points, and the FIs that were aggressively net short at around 94%, well, they have covered their shorts to around 86% or thereabouts. So the power of short covering has been on display. Well, let's tell you about the FI data first up. Now they're showing us some money. They were underweight the Indian markets. If you compare it with, India's weightage in the MSCI Emerging Market Index, FI weightage actually is much lower out there. And now it seems gradually, the hope is gradually that money can gradually come back. And that's why we saw in the cash market, they bought close to under 1,000 crores. And in the F&O market, just take a look at index futures. The covering was to the extent of close to around 26,000 contracts, because they added 12,000 long contracts and they covered close to around 13,000 short contracts. So that's the kind of short covering bounce that we saw in yesterday's trading session. Keep in mind that they are still net short, 1.63 lakh contracts on the short side, as well as, in terms of positioning, close to 86% of their positions continue to be on the short side. But we keep focusing on the FIs. Well, let's focus on the other big participant, the clients. They have got this spot on. Remember, they have been building their long positions. It went to around 1.35 lakh contracts, and gradually, as the markets have bounced, they have unbound some of those long positions, so they continue to remain net long on the index. On the options side, the FIs wrote more puts then calls in yesterday's trading session. And because of the aggressive put writing, now the PCR has moved back towards the higher end of the range. Higher end of the range is around 1.65 or thereabouts. In yesterday's trading session, the PCR went to that range of around 1.4 odd. And two strikes were active. 25,500 put, extremely active in trade yesterday. 25,600 put as well, fairly active in trade yesterday. So let's get the levels up for you on the screen. The near-term support going by the options data is around this 25,400 odd mark. And yesterday you had a perfect trend there. That's the market ended at the high point of the day. The key support though comes in at around 25,000 odd, because that's the level closer around the 20-day MA. So till that level holds out, you'll be fancying your chances. The market wants to move towards this all-time high of around 26,300 or thereabouts. So the journey has started. If you're an adventurous trader, then you'll say, let's trail our stop loss, at around 25,000 and play for a higher upside. Otherwise, some part of your portfolio could be take some money off the table on the index itself, because you've already had a good run. The Nifty Bank's in focus. Support is the recent resistance, which is around that 56,800 odd, and we're just 250 points away from the fresh all-time highs, which could very, very well be here today itself. But it's going to be a very, very big earnings day. because from the Nifty itself, more than 35% of the index will be reacting to numbers. Infosys and Wipro, the stocks are expected to open up in the red. I will be interested to see what happens from there, whether the street wants to look ahead. The other couple of names later today that will be reporting their numbers. Reliance Industries, for me, that's the joker in the pack. That's what could take the Nifty closer to around that fresh all-time highs. And finally, over the weekend, banking stocks will be in focus. A lot of those big banks will be delivering numbers, and big boy Ultratech Cement as well. So the trend seems to be up, but maybe some kind of taking some money off the table in the near term may not be such a bad idea.
9 banks report numbers on Saturday, and the big ones, of course, are HDFC Bank and ICICI Bank. Let's get in some equity market opinion now. Mahesh Nandarkar of Jefferies says that within the consumption theme, it's the premiumization trend that offers higher long-term growth visibility, as evident over the last decade. He says it's not just across goods, but also services. And the simultaneous GST and income tax cuts are the triggers for FY26. The Pay Commission can further provide impetus over FY27, FY28. Their preferred premiumization plays are Eicher Motors, Interglobe, GMR, Amber Enterprises, Lodha, Radico Khaitan, and M&M.